Hey guys, Tony here, back with the second of 4 weekly updates on AMC as we finish up Q2. I promised you back in April that I would do a weekly update as we end up the quarter, letting you know where I think we're at on box office, the revenue, and more importantly, the cash burn. Remember last quarter in March, I did sell my AMC on March 26th and 27th because my cash burn model was raising red flags, and I got a little bit worried that the company was going to do a dilution. So I sold, not because I hate AMC, not because I hate the play. I do hate getting diluted if I can avoid it. So I got lucky. Well, I obsess over the numbers too. So I'll call it partly luck and partly skill. I was able to step out of the play completely by the 27th. I sold at a variety of prices on the 26th and 27th. The dilution notice came out on the 28th. And then after the price bottomed out, I was able to go back in and rebuy my position, and I didn't have to endure any of that dilution. And then we had that beautiful run up in May, and I was able to make money selling into that run up as well, plus the call options that I had bought. So we've been playing this one pretty smart. And although I can't tell you exactly for sure if AMC is going to dilute or not, I can share with you what the cash burn model is saying. You can look at the numbers and make up your own minds. After last week's video, some of you had some very good questions. Tony, why are you worried about cash burn when they just raised $250 million? And in the annual meeting, Adam Aron said that they don't have any current ATM plans, any plans to do an at-the-market offering? And that's a good question. Let's review what he said really quick in the annual meeting.
As we said on our quarterly earnings call just a few weeks ago, paying down debt and extending the maturities of our debt continues to be a very high priority of the company in 2024 and in the years ahead. There are no plans on the table right now to sell equity to the general public through an at-the-market equity raise, as we have done many times in the past. We retain the rights and flexibility to do so in the future, if it makes sense to do so at the time, only upon the appropriate public notice in filings made with the SEC. Similarly, we can use shares to buy back debt or as inducements to extend the maturities of our current debt in the future years. That is something that the company is looking at presently.
So I heard, just like you guys did, and understand and believe that as of June 5th, the date of that annual meeting, the company had no plans to do a at-the-market offering. However, those plans can change, and we could get an at-the-market offering on June 30th or July 5th, or maybe later this year. I don't really know that there is a set date. It's very hard to predict a date with any accuracy, but we do know, as he said in the beginning of that clip, that it is one of the company's strategic objectives to attack and reduce the debt in 2024. That could be an ATM, or it could be a debt for equity swap, which does not require them to be considering an ATM offering at the moment. And you kind of heard him allude to that at the end of the clip, that they are willing to use shares to reduce the debt. Now, was he talking about some imminent debt for equity swap? I don't know. We know that they are actively talking to lenders about just restructuring the debt in general. So maybe that is what he is talking about. The whole point of my exercise and my paranoia about measuring the cash burn is to try and get some sort of comfort level for myself. This is just for any trading that I'm doing. And I said in April that I would do a better job of sharing my thoughts with you here in June. So here we are. With all of that very long prologue out of the way, let's look at the box office here and look at my spreadsheet, which will help us calculate where we're at for Q2 net income and Q2 cash burn. And remember, we still have 2 weekends to go, about 2 weeks to go in Q2. So these numbers are only going to get better. I had been projecting recently that we were going to end up Q2 somewhere between 1.6 and $1.8 billion. Originally, I was hoping that we would end up Q2 over $2 billion, but I still think that it's very reasonable that we could hit somewhere near $1.8 billion domestic box office in Q2. We're at $1.45 billion as of this previous weekend. With the release of Inside Out 2 this past weekend, June 14th through 16th, was one of the best weekends in recent history. $211 million domestic box office. If we can keep anywhere close to that over the next couple weekends, you could see how we could finish somewhere around $1.8 billion for Q2. And we still have A Quiet Place Day One and Kevin Costner's Horizon, which will be hitting the box office at the end of this month. It is still early and we're not at the end of Q2 yet, but let's just plug in 1.8 billion domestic box office to the top of my spreadsheet and scroll down and see kind of how we're looking for the net loss and the cash burn for Q2. That would yield us somewhere around a loss of $196 million for the quarter. Hopefully we come in better than 1.8 and we can make those numbers a little bit better. We'll just have to see. I'll report back to you guys on that in the first week of July. And when we move down into the cash flow and cash burn part of my spreadsheet, again, just an estimate. Don't use this as gospel, but it will probably be pretty close. We have $250 million financing cash flow, money that the company raised in Q2, that most recent dilution that we get to add in. But from operations, we're also going to burn somewhere, I think, between $200 and $250 million, depending on what the box office comes in at. Model right now is saying cash burn of $230 million plus the $250 million they raised, gives us a net cash flow of about $19 million. So the cash position essentially would stay flat from how we ended the cash position in Q1. That number was $660 million. So we're going to have a cash burn in Q2. We raised money in Q2. I expect that the cash position will be pretty similar when we end this quarter here at the end of the month. The question then to ask ourselves is $660 million enough comfort level for management? Well, if we think that Q3 and Q4 are going to be pretty good quarters in terms of box office, certainly better than Q1 and Q2, maybe we don't have a cash burn at all in those two quarters. We're going to have to watch the box office and see how those quarters go. Of course, it's way too early to say for sure, but the way we understand things right now, Q3 and Q4 are going to be much better than Q1 and Q2. So maybe $660 million is enough for management to feel comfortable for operations to get through the rest of this year into next year. That is one thing to think about. The other piece of the puzzle, though, that I want to make sure that we don't lose sight of is they also need to restructure the debt. And there was a very good conversation on Twitter today from Markets with May talking about what management is likely looking at in terms of timing and all of the moving parts for restructuring that debt. People much smarter than me, like Markets with May, are thinking that it will likely be close to the end of this year, or maybe at least at some point when box office, cash flow, net income all look much better, that there may actually be a strategic advantage to AMC to delay doing anything with the debt restructuring towards the latter half of this year. So again, that kind of makes me a little bit undecided. If there was some debt for equity swap or a need to raise additional cash as part of the debt restructuring, is it going to be in a couple weeks, or are they going to try and wait until the second half of this year? I guess what I'm saying is right now, it is a bit of an unknown. I'm not as worried about it as I was in March, but I think that as a collective group of investors, it is important for us to not lose sight of the fact that there are some unknowns out there, and we don't know exactly how management is thinking about where they want to be with their cash position and what they need to do to get the debt restructured. So don't lose sight of that in your trading. Just make sure that you're taking risk appropriate decisions as you're making your trades in AMC. For me and my family, we will be watching as many movies as we can as we finish out Q2 here. There's still 3 or 4 left on our list. We saw 2 last week, Garfield and Bad Boys Ride or Die, which was a great movie. Hopefully you guys are out there supporting your investment as well. While I have you here, if you stuck around this far, we are 2 days into the trading week. Wednesday is a national holiday in the United States, so we got 2 business days left to go on this week. Max pain for AMC is around $4.50 for this Friday, the 21st, unless something unexpected happens with GameStop, which I am not anticipating. I expect AMC to finish up somewhere in the $4.50 range at the end of this week. That's my own expectation. If you got something different, let me know down in the comments down below. Thank you for sticking all the way through on this video, all the way to the end here. I certainly appreciate it. If you made it all the way to the end of this video, leave me a thumbs up in the comments and let me know that you made it to the end. I certainly do appreciate you guys watching all the way to the end. I am Tony Denaro, and I will see ya on the next video.